Welcome, friends, to another series where we will discuss about being successful in stock trades in a short term. So, have you ever come across scenarios where you have purchased a very good stock, probably a large cap, and then after you purchased in few days or after few sessions, it starts to dip from your buying levels, and just before you purchase this stock, you have also ensured that you have observed that the stock was going up consistently, right? If the company you picked up was good, if you picked it when the things were really going on good for this company, where the share price was appreciating well, then what changed suddenly after you purchased it? Why is it that this stock started to fall? Why is it that you are seeing losses after you have purchased the stock? Evidently, this is because of the fact that some stocks, or at least most of them, they do move in specified ranges. Okay. So for us to be successful, we must know about these ranges, as this will help us to understand if the stock that we are buying, right, is available at a good price or is on the verge of hitting the upper threshold of this particular range, right? So we will try and assess, how do we understand these ranges for some of the stocks? Okay. Let's say for our example here, I'm trying to use BPCL consistently in the slides, but you can pick up any share and it should widely apply to this, apply to any of the shares that trade in the, share market. Okay. So let's first identify what are the traits of a successful trade. Okay. There are some that I have listed, but are not limited to this. Bottom line, the trade of a successful trade is that you are making money. And now, how do you make money? Is that, it's the best way is to identify that the target price, it is to understand the support and the resistance points for a particular stock. Okay, what they are, we will come to it as we move along. The support and resistance points are, specific price points on a chart of a stock where these particular stocks are expected to attract maximum amount of either buying or selling, which can result in a trend reversal. Okay, we will see how these reversals are seen on charts when these support and resistance bands are hit. And then the third point is, of course, the support price is a price at which one can expect more buyers than sellers. And that's the reason why you call it as a support, because then the stock, seems more established at that point in time. And at this point in time is where you see the stock reverse in a positive direction with higher volumes than usual, which essentially means that large players in the market are buying this stock. And what is resistance, right? I mean, the resistance price is a price at which one can expect more sellers than buyers. Essentially, at this point, the price sees a reversal in a negative direction. Basically, the stock starts falling and you see more volumes than the usual, but of course in the red zone. So let's take a deeper look into what is meant by a resistance or a supply zone, right? As the name suggests, resistance level or a supply zone is something which stops the prices of a stock from moving any further. Okay, so the resistance level is a price point on the chart where traders expect maximum supply, or there is a lot of selling that comes in for this particular share or the index at this point in time, the moment the band is hit. The resistance level is generally above the current market price. So in the next slide, we will try and analyze, how to identify what is meant by a resistance. Like we said, resistance is generally a price point which is hit by a share at a higher point, right? So as you see, this is the share movement of BPCL spread over a couple of years. Okay. Now, what we are seeing here is, something that I have plotted, which is basically trying to understand what was the higher point at which, generally the share hit and it took a reversal. So if you see here, yes, I mean, we could have gone back, but this is the best I wanted to go. But if you see here, this at this point in time where I'm highlighting, this is the point and the place where the share hit in between this and this range. Okay, and you have always seen a reversal in the stock from this point. So what do we call this zone? We call this zone as a supply zone or the resistance zone. Okay. Now we will try and analyze how a stock, okay, how the movement has been impacted every time it has hit this particular supply zone. Okay. We see that this is the first time it hit the supply zone, and the result was it dipped by a few, at least 100 rupees in its stock price. And then again, you see that it has gone up, but that's not the concern here. But then the moment it hit the threshold of the supply zone again, right? You see another dip in the share price, which is around 75 rupees from its peak. Now, the third time is somewhere here where it definitely hit its, it was somewhere in the zone of the supply, and then from there you definitely notice a huge fall over a period of time, to a point where it really hit half of its value. Basically, it lost almost around 300 rupees in its value from this peak to here. Identifying the next one, like you see, none of these price points here come into the supply zone. But the moment this hit the supply zone, you also see that it has consistently fallen in its share price here. The next one is here, where it definitely went up, and from there again you see that the stock has gone below, right? So what is it that we understand from this? What is our key takeaway? Every time the share comes into the supply zone, right, you see a dip in its price, and sometimes the dips are small, sometimes the dips are very large, right? Like the one we see here, the one we see here. The smaller dips are somewhere here, and it still gives us a decent 150 rupees of profits if we can end up shorting this particular stock at these levels. Okay, so this is much about identifying the supply zone. How do you make money here? Is when the stock hits this supply zone, you always keep your stop loss a little bit higher than this, and then you end up either shorting the stock, or you buy a put of this stock, okay, and you keep consistently buying the put for a period of time. Essentially, you'll make your good money there. Okay, like I said, these are our resistance points. Okay, now moving on, we will try and identify support or a demand zone, just like the way we identified the resistance or the supply zone. We will also try and find what is a support or a demand zone. Like the name suggests, friends, the support is something that prevents the price of a stock from falling any further. Okay, the support level is a price point on the chart where a trader expects maximum demand in terms of buying coming back into the stock or index. So when a stock falls, to the support line, we definitely expect a bounce back from there. And that is what we will see in the same stock of BPCL that we just discussed. Okay. Like you see here, this is the same chart with the same time that we identified. But here what I have done is, like we said, demand zone is something that is seen towards the bottom range of the stock. So if you identify here, this is the bottom line that I have drawn here. And then this is the range that I have put for this, demand zone. Okay. So basically what it means is every time the stock hits this demand zone, you will see a good buying coming into the stock, wherein you will make some money out of it. Okay. The first one that you see here is this particular price point. Okay. Where we believe that the stock it fell to the demand zone, the bottom line of the demand zone, right? But however, it did not hit the stop loss, right? So it fell, and then it recovered from these levels, and you see that it definitely went up. Okay. When was the next time we saw this touch the demand zone? Is at these levels where the stock hit the demand zone or the just the top end of this demand zone, and then as you see friends, it has really bounced back to the point where it hit its a peak of the resistance. Okay, and then subsequently the next time we see this particular stock in the demand zone is somewhere here, right, where you see that it has dipped consistently but not hitting the stop loss. But then again, from this point we see how the stock has gained consistently and it has gone up. And then the next point would be when the stock falls from these levels of the the resistance to this level of the demand, and then we notice how the stock has gone up again. And now if you see here, the latest and the greatest trend also indicate something similar, where the stock has hit the higher threshold of the demand zone, and it is also bouncing back consistently. Okay, so how do I make money in this trade, right? I mean, what is the key takeaway for me? Every time the stock hits my demand zone, it could be generally the between this particular range, right? You end up buying the stock. Okay, you could buy in the stock directly. You could buy the future of this, or you could end up buying a call of this particular stock if it is trading in its options, right? And then you can wait for it consistently for it to go up. Okay, so unless otherwise you don't see a reversal trend, right, you can keep assuming that this is going to go up. Moving on. So what is the reliability of support and resistance, right? I mean, we are in this to understand where the stock can find its support or resistance, and where it will ideally bounce back. Okay. So what I want to tell is the support and resistance, the bands, these are only indicative of a possible reversal of prices. So this by no means should be taken for as certain. Like anything else in a technical analysis, one should weigh in the possibility of an event occurring based on the patterns in terms of probability. So ideally, it is best you keep a stop loss when you make such trades, even when the stock is in this range. Okay, so that you are covering your money in the best possible fashion. And as can be seen from the charts of the BPCL, right? I mean, anytime the stock has touched its peak, which was probably 540, it has hit into its resistance and has corrected. Whenever the stock has reached somewhere below 250 or that range, it has found decent support levels and it has gained back, right? I mean, we have seen this happening a couple of times, at least 4 to 5 times, both for resistance as well as for support. Now, sometime in future, these bands might get adjusted, and that is where you should keep looking at these bands, both support and resistance, consistently, and try and assess this on a regular basis. Now, sometimes it can be also deceiving, and the support and resistance levels can be seen breaching. That's what we just talked about now, right? In those cases, we need to redefine these levels for the best of our convenience. Okay. Now we will put things in perspective, right? I mean, I just want to understand. I just want to put both supply and demand zone, and then see, in a true moving way or in a true moving world, how this would trade. Okay. The first probable point was at this place where the stock hit the demand zone, which essentially means you buy the stock, right? It goes up by a decent points, maybe around 50-60 rupees here, and then what we see next is that it falls, right? And it falls again, hits the demand zone, but like we see here, from this demand zone, it is hitting into the supply zone here, or the resistance band. So the moment it hits the resistance band, what we have learned is you see, a fall in the share price. All right. Then again, we understand that the stock, gained some strength, and then it went back again into the supply zone. But for what? To be beaten down again. Then again, it just tried to stabilize at some of these levels, went back into the supply zone, to be beaten down again into the demand zone, right? It took a while, but it definitely fell back to the demand zone. And once it is back into the demand zone, we know that the next way for it is upwards, which essentially means what? As you see here from these levels, the stock went up again back into the supply zone over a period of time, right? So then the moment it was in the supply zone and it hit its, maybe 75th percentile of the supply zone range, we notice what? That the stock starts falling, right? So you see here another, point where we see that it is in the supply zone. And from here at these levels, you see a decent dip back into, our demand zone. Like we see here, at this point, again the stock went up. Again, it came back into the demand zone, and you see the stock reversal here. So over a period of maybe 4 years, we have received 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 points where you could have made money in one way or the other just by adopting this method, right? Now, how much money you make, when you make, or you really don't make is depending on your trading strategy, how you combine it with the other technical indicators. But the moment you understand the demand zone and the supply zone, you can always be assured most of the times that the stock is generally going to trade in this higher or the lower range, right? And then it is easier for you to draw these conclusions of when to buy, when to sell, when to buy and when to sell, right? I mean, that any stock you can make money only when you buy at lower levels and sell when it is at a higher levels. So with this, friends, I hope you have learned a decent amount of understanding, about having to plot your own resistance bands and also the support bands, which or else we call as a supply zone and a demand zone. Try this, work it out on other stocks. Leave us a comment, subscribe to our channel, and we will be happy to help you with any of the other analysis that you probably need. Thank you. Thanks for watching, and this is it for the day. Have a good day. Bye bye.